But we quickly realized that cannabis dispensaries in the US and in Canada were deemed essential businesses. And sales spiked. Marijuana, CBD, sales spiked. Initially, they thought it might be hoarding, but the sales boost has been very sustained. And in fact, in the overall market bounce back that we've seen, cannabis stocks are way up. Now, I readily admit they had been down dramatically over the past year, but perhaps we've seen a bottom and cannabis stocks have rebounded very, very well.
Yeah, and we look at some of the
Now,
specific names. I know you had a few in mind to focus on. Give us a little, a few seconds on each one. I know you had Curaleaf in there. You had, I was watching Tilray today very closely. I mean, give me a few on each thought.
great example. Now, YOLO is an actively managed fund. We think it's infinitely important in a very volatile, very new area like cannabis. Tilray, you mentioned, just came out with earnings. Well, they lost money again. They've lost money every single quarter. That's why we dramatically underweight a stock like Tilray that I call one of the usual suspects. It's one of those big name Canadian firms that most people have as a large cannabis holding. We own a tiny bit of. On the other hand, we choose to overweight the United States. You mentioned Curaleaf. We like Curaleaf, the multi-state operator in the U.S. They have exposure to Illinois that you mentioned. Also Green Thumb Industries, Cresco Labs. Trulieve is a firm that really dominates the Florida medical marijuana market. So our fund invests differently. All cannabis ETFs are not created equal. We get exposure in the U.S. that other funds don't have. Our largest holding is a firm called Innovative Industrial Properties. It's a U.S. listed, U.S. based REIT that services these multi-state operators. There are a few winners in Canada that we like. We like a firm called Village Farms. We like Afria. Those are companies that are smaller than some of the big names like Tilray, but they are well-run companies that have profits or at least a path to attaining profitability sometime in the foreseeable future.
Right. And you mentioned that Tilray, was not one of your favorites. You have a very tiny bit of it. You had Aurora in that same sort of category as unprofitable plays in this group. People like to invest in this group, particularly for the long term. The younger folks, like millennials, think that they can stick around. They can wait for legalization from coast to coast in all the states. A name like Curaleaf and some of the others that you mentioned, Green Thumb, Trulieve, these are U.S. multi-state operators, MSOs. So they're operating, I guess, in distribution for states that have legalization thus far, more than 30 states, right? But they're not listed here. They're not at the NASDAQ and the NYSE because they can't be, right? It's not federally approved.
Great example. It's a very gray area. These companies are not federally legal. They're still multi-billion-dollar companies in some cases, like Curaleaf, but they are forced to list on the smaller CSE exchange in Canada. We get exposure to those companies through a derivative contract, through a swap contract. We think it's very important to have access to these companies to get exposure because they're more profitable. The U.S. market is at least 10 times the size of the Canadian market. People shouldn't get too overly excited about, again, just the biggest names in Canada. That's why we like the U.S. And we like active management because there are Canadian firms that we like. I named a couple, but Canada's going to do better. Canada's going to do better than it did last year. They had a disjointed government rollout of recreational cannabis, but we think stock selection in cannabis is very, very important. We're big believers in cannabis for the long term still, but you got to be selective.